Hello to our regular viewers, welcome back, and to the new viewers, welcome to Talking Points. This is a gathering place for smart and savvy investors who want to learn the secrets of becoming very successful property investors. And each week we focus on a topic that'll help you to become a wise investor, and we delve a little bit deeper in each week. So every topic is related to a greater whole, which is of course the wealth mastery system. And this is basically just a new way of thinking and investing, which was developed by the founder of the club in 1996. Since then, the club has gone on to help thousands of people become very wealthy investors just by using the core principles in the right way. Now, if you'd like to find out more about how you can get more information about this, then stick around to the end of the video and I'll share a little bit more detail. But for now, let's get straight into the point of the day, which is relating to tax, and more specifically, Section 13(6) of the Income Act. Now, to help us understand this seemingly foreign concept and to understand how property investors can benefit from it, please help me to welcome Dehan Kriel from Destinata Accounting.
Thanks a lot, Daniel. It's a real pleasure to be here, and very welcome to all the members of Wealthmaster and everyone that's listening to us.
Perfect. Now, Dehan, I'm going to jump straight into the questions if you don't mind. So, based on Section 13(6), who will be benefiting from this?
Yes, Daniel, the whole situation for this benefit tax allowances is any tax resident in South Africa that is a resident for tax purposes. He can stay in the UK, but still must be a tax resident in South Africa. Then he can get this allowance for that Section 13 of the income tax.
Now, what exactly is Section 13(6) of the income tax? I think a lot of people may have heard of it before, or for some it might be a completely new and foreign concept. So can you just give us a little bit more detail about what it actually entails?
Yes. 13(6) is a section in the Income Tax Act, and everyone is not fully accomplished with the rules and regulations for the allowance to get. And the main thing is it's a tax allowances on residential units you earn. And the main thing you must keep in mind is there's a 5% for 20 years on a residential and 10% on a low-cost residential unit. And residential units are low cost when they are less than 300,000 or less than 350,000.
Now, Dehan, who exactly can qualify for this benefit? Who gets the benefit at the end of the day?
The taxpayer have a certain criteria to qualify for this benefit at the end of the day. The main reasons is the taxpayer must own 5 units or more in South Africa. It don't need to be in one place. It could be anywhere in South Africa. So one in the Cape, one in the Natal. You don't have to situate it all 5 in the same complex or the same city in South Africa. And yes, exclusive use must be trade purposes for renting it out to everyone out there except the taxpayer himself. And then must be residential units, no commercial units are allowed for this 13(6). And yeah, it is a nice allowance if you use it correctly to get benefit from SARS.
Now, just speaking about the allowances, how are the different allowances calculated according to the unit types?
Yes, Section 13(6) of the Income Tax Act does allowance for 5% high cost units, that is above 350,000. And then low cost units get up to 10% allowances of a benefit, but there is 2 criteria that must be met. The unit mustn't be more expensive than 350,000, and the rental income they receive can only be 1% of the cost price. So if it is a low cost unit, then it qualifies if the cost was 350,000. And then the rent cannot be higher than 3,500 per month.
Fantastic. Now, another thing that you mentioned in your article last week was the urban development zones. So can you just tell us a little bit more about that and how our property investors can benefit from this in terms of the tax incentives?
Yes. The urban development is nice to have because it kindly like motivated people to develop in South Africa. And that is good for us as a South African economic to get further future driven and everything. So yes, that 13 quad is the urban development zone. If you have existing or building you already owned and you need to construct it or extend it a little bit, then you get also allowance on the urban development. When refurbishment of existing unit, you get 20% depreciation allowance over the next 5 years. And then when you got the construction or new building and extension of existing building, the first year you get 20% depreciation, and then for the 10 or 11 years in total is the maximum at 8% after the first 20 years. And then you can claim the purchase price of the new purchaser of 55% times 5%. That is the allowance. And then a second building improved by the developer or the purchaser is 30% allowances of the purchase price.
Fantastic. And now my last question, I just wanted to find out. So you mentioned that the commercial dwellings are not, or commercial buildings are not included in this. So we focus quite a lot on residential as the Wealth Masters Club, but does any retail space get any value out of Section 13.6?
Not in 13.6 entitled to, but the Section 13 is for your commercial buildings, and it's basically also 55% and 30% and then 20%. It depends on how the building was acquired to you, to the owner. And then the main reason, 13.6 is only for residential units, but 13 is for commercial building.
Brilliant. Dehan, thank you so much for taking the time to work through this seemingly complex matter, which I think holds incredible power for investors if they know how to use it. And as I mentioned at the start of the video, our focus is to help you and educate you to become more savvy and more successful. So to do that, you need to have a team of experts that is exactly what we provide at the Wealth Masters Club. So if you'd like to find out more about how you can become a property investor using other people's time, skills, and money, then register for our free training, which is taking place this weekend, and you'll find all the details in the description below. That'll help you just to understand how easy it is to create generational wealth through property investment. Now, until next time, thanks so much, Dehan. We'll see you soon. Bye-bye.